Disclaimer: this journal reflects my personal trading activity and operator reflections. When people hear about cryptocurrency, the first question they usually ask is very simple. Should I buy Bitcoin? Should I buy Ethereum? And for a long time, I thought that was the main question too. But the more I started studying the space, the more I realized that the real opportunity might not only be in the currency itself. It may actually be in the infrastructure that makes the system work. Right now, cryptocurrency is still developing. It's growing, but it's not replacing our existing financial system. Our world still runs on dollars, banks, payment networks, and the entire infrastructure that has been built over decades. So instead of replacing the system, what we're seeing is something different. We're seeing a parallel financial layer slowly being built alongside the traditional system. Companies are experimenting with accepting Bitcoin payments. Some businesses are exploring paying employees in cryptocurrency. Financial institutions are learning how to custody digital assets, but almost every time those assets still convert back into dollars. And that tells us something important. Crypto may not replace traditional money. It may exist alongside it, almost like a parallel system. And once I started thinking about it this way, the investment question changed completely. Because during any technological shift, there are always different ways to participate. Some people buy the asset itself, but others invest in the companies that build the infrastructure. In many emerging industries, the biggest opportunity isn't always the asset. It's the infrastructure that makes the entire system work. The same idea can apply to cryptocurrency. Instead of focusing only on buying Bitcoin or Ethereum, we can also look at the companies that are building the bridges between traditional finance and digital assets. For example, exchanges that allow people to move money between dollars and crypto. Payment companies that integrate digital currencies into existing payment networks. Custody providers that help institutions safely store digital assets. And technology companies that provide the computing infrastructure behind blockchain systems. These are the companies building the rails, the gateways, the infrastructure. And if adoption continues over the next decade, these businesses may benefit regardless of which cryptocurrency ends up winning. At the same time, participating in this transition does not require rushing out to buy digital assets immediately. Sometimes the most valuable step is simply understanding the system, understanding how the technology works, seeing how money actually moves through the system, and becoming familiar with the mechanics behind wallets, custody, exchanges, and settlement. Because every major financial transition in history has taken time. The internet did not replace the entire economy overnight. It slowly integrated into existing systems. And something similar may happen with blockchain technology. So instead of thinking about crypto as a sudden revolution, it may be more helpful to think about it as a gradual evolution, a parallel system developing next to the traditional one. And as individuals, we have choices. We can speculate on the currencies themselves, or we can study the infrastructure that makes the ecosystem possible. Either way, the most important step is not jumping in blindly. The most important step is understanding what is actually being built, because the next decade may not just be about digital assets. It may be about the financial infrastructure of a new digital economy. And the better we understand that system, the better prepared we are to participate in it.